Russell, you say it's a fair year in challenging market conditions. Now, looking at the JSE All Share, it was up around 16% for 2010. Your revenues were able to grow around 9% to 1 billion rand, 255 million. Net profit before tax coming in at 380 million rand. Were you satisfied with this performance?
Yeah, I think all you can say, it's a solid performance. It's net cash generative, so we can increase the dividend to our shareholders. There's nothing spectacular about it, but it's very solid. So the JSE remains one of those very solid, well-run companies, no debt, yes, lots of cash on the balance sheet, marginally improved in performance in frankly quite difficult times.
Where did you see key revenue growth coming from?
Equities, so the bread and butter stuff, the equities trading.
5% growth, I understand, on that front.
Yeah. Then on the information sales, a little bit on the commodities derivative side, virtually flat on the equities derivatives, the rest more or less flat, so nothing spectacular. And frankly, one should be surprised, you'd be very surprised to see spectacular results, because before there are spectacular results, we'll rather drop the prices to our users and just ensure that continually we have very, very solid results.
Let's talk about the bond market. We keep talking about foreigners' appetite for local bonds, but if we look at the bond exchange, first full year contributions to JSE earnings, net negative growth of 10% in revenue. What has your experience been like in terms of appetite from foreigners versus local investors for bonds?
Well, the bonds themselves are still attractive, because if you're talking about government guaranteed yields of between 7 and 8% depending on the maturity, in today's climate that's not bad, especially with what's happening all over the world. But that's the one aspect. For us, the issue is the actual physical operation of the bond market in South Africa, and that hasn't been fixed yet. And that's a fight that we're not going to stop fighting, because what we are striving to achieve is the way the world is going, which is central order book, which is transparent, where there's proper price discovery, and where you can hook systems onto so that you've got proper surveillance. Exactly like we did with the equities market now since '96. That's, by the way, the only way we managed to achieve that first position in the world when it comes to the quality of regulation of securities markets. You'll never get that if you continue to insist that everything must be over the counter and opaque, which is where we still are.
We're short on time, so I'm going to have to move on from that conversation, but the African board is also another problem area. It hasn't quite taken off. Is it time to start rethinking this model? Is it time to scrap the Africa board?
No. No, if you speak to us in 50 years' time, we'll still be talking about something similar to the African board, because what it boils down to is putting more product on our shelves, product in the form of African companies. Now, listings are going to be slow again this year. We only had 14 last year.
Is it a political issue?
It's part political, it's part human, because human beings have to take those decisions, and if human beings feel uncomfortable for whatever reason, either they're being pressurized or they just don't see the benefit yet in getting a much better service from the exchange operator, well, then the listing doesn't take place. But eventually, when the decision to list on a good, well-functioning market is taken, well, then the JSE's got a chance of collecting that listing.
We've seen a lot of mergers. Let's take a look at the global exchange market at the moment. We've seen a lot of mergers taking place between global bourses. What is your thoughts on this? You say you have no immediate plans to tie up with an exchange. Under what circumstances would you look at that?
Well, I say good luck to those guys, because if they don't take costs out of the system, then there's no point in doing those mergers. And any exchange, the two big costs are IT and people. That means they're going to have to rationalize either or both of those items. So then it's a question of, okay, whose IT do we use, yours or mine? So somebody's going to be put out there. And then there's also going to be a question of, okay, whose people do we keep? Yours, mine, who do we retrench? Those are all painful things, especially in this world climate where the world economy hasn't recovered. Those things have to be done, otherwise the mergers don't make sense. So I just say good luck to those guys, and
Not in the immediate future?
No, frankly, I prefer to keep myself busy with what we are keeping ourselves busy with, which is improving the state and the quality of our financial markets.
Russell, one last question. You're stepping down from the JSE at the end of the year after 15 years at the helm. What are your plans for 2012 and beyond, and what type of legacy would you like to leave?
Well, I know I'm handing over a well-run ship to an outstanding deputy. Nikki's been my deputy for 8 years. When she assumes the role of CEO, she will be 1 year younger than what I was when I took over, with a big difference. She'll have 15.5 years of experience, whereas I had none. So I know I'm handing it over to an extremely capable person, and I know I'm handing over a very solid, well-run business. I'm going to keep very busy. I'm not retiring from life. I'm not retiring from business. I'd drive everybody crazy if I started thinking like that. So I'm going to be very busy with lots of different things.
Anything you'd like to see happen in the JSE before you leave?
Yeah, plenty. I'd like to see...
Give me one thing.
The entire interest rate market must come onto the central order book, as well as the derivatives equity market.